My first experience with options trading wasn't the best. I had done some research on it, but really had no understanding of what puts and calls were, and especially what the Greeks were all about. Then I met this guy who claimed to have done well with options trading and was willing to teach me his technique. Great! However, it turns out he didn't actually have one. His entire system was simply to look for stocks and ETFs that seemed low and that he felt would go higher. Basically, buy low, sell high, just like stocks. But options aren't stocks, right? First off, there was this lingering confusion over the options chain itself. So many columns and numbers to look at. I knew he was being pretty random about things when I started asking him why he'd choose certain deltas over others, and I couldn't get a concrete answer out of him. And I knew I was in over my head when I simply could not understand these concepts of net credit and net debit. Look, I'm familiar with finance, so maybe that complicated matters a bit for me, just knowing a little too much. But I just couldn't understand why you'd ever open a position for net debit. That means you're spending money up front, right? And of course, the counter question was always in my mind as well. Why would anyone pay you up front? None of this was made clear by my acquaintance. And when he told me he had lost $3,000 and said, no big deal, I'll make it up later, I knew I had to get out of this. He was just too nonchalant about the whole situation. I didn't want to lose money. So I bailed on all my positions, barely breaking even over the course of a couple nervous months as I unwound my portfolio. My last position was GD, General Dynamics, and in a stroke of luck, it skyrocketed up enough for me to take a big old goose egg on the entire endeavor. I certainly didn't learn much from that experience, and it left me with a whole lot of questions. And the research I was doing online simply wasn't good enough for me. There was just too much vagueness. Everybody touted these ideas, but it all seemed to me they were all flying on a wing and a prayer. Then I found the man who would later become my options trader trainer. He gave a quick presentation at an event I was attending, and his presentation made everything crystal clear. I got it. Well, mostly. At the very least, I knew I'd made a quantum leap in my options education by listening to him. I quickly signed up for his course and paid the monthly fees for his advice. It was worth it to finally understand what I had gotten myself into half a year earlier and barely had gotten out of with my skin intact. What I was missing in my original attempt at learning options trading from this random dude had very little to do with options trading itself. Rather, what I needed to know about was risk over time. That I was all confounded around understanding the basic idea of net credit versus net debit, it wasn't because I lacked some sort of financial knowledge. What I lacked was knowledge of how to qualify that risk. You see, I pay someone to take on risk on my behalf. And I earn money because I'm willing to take on risk on someone else's behalf. It's insurance. Options are essentially insurance. That's why there's a credit and a debit choice. Depending on which path you take, you're choosing to either take on risk or hand off risk, just like when you pay your car insurance company. They get paid to take the risk that you won't crash your car and be forced to pay for a new car for you. And the reason that when you trade options, you're driven towards a net of either a credit or debit is because you're combining things together. Some legs of the trade are insurance for the other legs of the trade. If you put on more insurance legs, you net a credit. If you're asking to be covered, you net a debit. It made so much more sense. I still had a lot to learn, but I knew I had overcome a massive hurdle. I could even start to see why the Greeks might be important, though it would take me a much longer time to intuit what they actually meant. The Greeks, as it turns out, explain the experience I had with my original positions, and in particular that very last example, General Dynamics. I was losing money constantly with GD, and I didn't see a way out at the time. The stock was going up, but the option trade I had on wasn't matching the growth. That was lesson number one. Options are not stocks. They are subject to the whims of other factors, which we call the Greeks. They also expire, which by itself has incredible consequences to the price of options. Despite the fact that the position was going up, my options prices were going down. And that was lesson number two. Purchased options prices, that is, taking on net debit, decreases in time. This is what is referred to as theta decay. As options get closer to the expiration, they lose the extra time that had once made them so valuable until its time value hits zero. And this leads on to another concept called moneyness, but that's for another time. Then out of the blue, my price on General Dynamics options got so high that I could actually exit at a break-even point. And that leads to lesson number 3. An extreme move in the stock can have an extreme impact on the corresponding option. In this case, the Greek in question was the delta. The delta pushed up the price of the option enough to counter all of the theta decay that I had accumulated over time. Look, I had been lucky, very lucky. I hadn't invested a lot into these positions, so the worst that could have ever happened is I just lost what I paid in the net debit. It's sort of like going gambling at a casino. You allocate a certain amount of funds ahead of time, and you expect to lose it. I lucked out. I didn't lose my money. I had managed to get out on a scratch. Being able to reflect back on that experience without too much emotional baggage related to the loss of my invested capital has been a boon. I got to explore a new future in options trading with a clear head. For that, and for the experience, and for having a trainer who could make things clear for me, I'm grateful. I hope this narrative sheds some light onto some of the issues that beginning options traders might encounter. As you can see, some of the fundamentals have very little to do with the options themselves. It's simply understanding the type of risk that you're taking at any given moment. There are plenty of elements that you do need to learn about when trading options. Having a clear understanding of the fundamentals will help tremendously in accelerating your options trading training. I wish you the best of luck, and thank you very much.